Well, good morning, everyone. Today is March 13th. It's a Friday, Friday the 13th, after the biggest down day in history. Oh boy, boy, oh boy, oh boy. Let's get into it. So, shares rose in Paris and London, but fell 6.1% in Japan following Wall Street's and Europe's biggest drop since the 1987 Black Monday crash. That's what happened yesterday. Some markets and governments stepped in and stepped up precautions against the spread of the new coronavirus, testing and so forth. More central banks, including those of China, Sweden, and Norway, intervened to flood credit markets with liquidity. A day after similar intervention from the US Federal Reserve and the European central banks. That's very positive. The overnight sell-off on Wall Street helped wipe out most of the US big gains since President Trump took office. Just last month, the Dow was boasting nearly 50% increase since Trump took the office. It officially went into a bear market on Wednesday and finished down more than 20% from its all-time highs. For the S&P 500, this is the fastest drop since World War II from a record high to a bear market. Folks, it got bad. Now, as far as reports, we have a consumer sentiment report coming out at 10 a.m., about an hour and 7-ish minutes from now. It's going to be very interesting because it's going to give us some understanding of what we're looking at in terms of consumer sentiment following the beginning of the coronavirus, because it started about a month ago. But again, this is just a preliminary number, and the biggest number is obviously what happened to the market yesterday. But let me show you what's going on. Remember this little circle? I've been showing you the percentage of stocks above the 200-day moving average. This little peak right here, which is similar to what happened right here, back in January 2018, notice the sell-off. Notice every time we hit 85th percentile, in the percentage of stocks trading above the 200-day line, we go lower. We finally went lower, but the NASDAQ 100 was extremely resilient. Now, that's another story, because if this was all caused by the coronavirus, right? Follow me here. Then NASDAQ 100 stocks should be hit the most, not the least. But actually, they were the strongest stocks, and they remain the strongest stocks. If you look at the S&P 500, the percentage of stocks trading above the 200-day moving average is lower. We'll go there in a second. But now we're finally getting to some low areas. Let's see. See, if you go back 20 years, finally we're in oversold territory. The market, the S&P 500 was oversold while the NASDAQ NASDAQ 100 was still trading at the 100-day line. Finally, we had that big break that I was expecting. All right? So it's here. It came. Now it's time for the market to rally. Just to give you some perspective, look at this. And I know I've been talking about the same thing, but there's a reason for it. It's because the second shoe didn't drop till yesterday, and finally it did. Now, notice 13% in the S&P 500. Notice how they look similar now. This is the NASDAQ 100. I'm showing you the same thing here. Let me show you the S&P. I'm losing my mind finally. It's finally come to that. Let me go to the S&P sectors. Here we go. See, the NASDAQ is in the teens, while the S&P, look at that, right up to 2008 levels. That makes sense. Notice that 4.95%, while the NASDAQ, as you will see here, is still in the teens. So 4.5% versus 13%. But nonetheless, if you look at the graph, you will see they look similar. They're not out of place. It's not like everything goes down to 25th percentile and we're still stuck at the 50th percentile. So it appears we bottomed out. If you look at the QQQ, which we will look at right now, on a daily chart, let me clear all this junk out of here. If we put on the 200-day chart, you will notice that we went straight below it, and now we're appearing to be near similar support level, which we haven't been to since April. I think we'll bottom out. I think we're going to bounce. It's hard to say whether or not It's very, very hard to say whether or not the market will stay around here or cool off some more because we don't know the full impact of the coronavirus. And the question now moving forward is, has the market, has this price action assimilated the worst case scenario that's going to happen to our economy in America? I don't know the answer to that question. That's a problem with these unforeseeable circumstances. It's like trying to figure out the death rate after a tornado or a volcano or an earthquake. It's a moving target. We don't know. So it looks like we're moving higher right now, and every indication, look, volatility is higher than we've seen since 2008, highest we've ever seen since we've been tracking this stuff. So the bottom line is we are in panic, fear mode right now. But I think we're going to bounce. The only question is how long we're going to bounce for and where we're going to stay there. Let's look at the Dow real quick. The Dow's up about 6% getting into the open. Let's move these lines away. I don't know. My assistant likes to put all these lines on here, and I'm not a big fan. So if you look at the S&P, at the Dow Jones, if you look at the 200-day line, we broke it hard and fast. And if you look at the 10-year chart, looks like we have a little bit more downside to go till we get into the support area, which is at about 16. That would be a nice big shakeout. I don't think we're going to get there. The next few days is going to be very, very big. We got the put to call ratio, couldn't even go higher yesterday, which means there's a good chance we're going to bounce. So let me go back to the chart. There's a good chance. Here's a daily chart. There's a good chance we're going to bounce up to these levels. Whether we're going to hit the 200-day line again, I'm not sure. I think the market's going to stay bearish or expand on volatility between 27,000 and 22,000 in that range till we see more evidence of the downside and the destruction that this coronavirus brought our way. I'm being honest with you. I'd love to say that the market's going to bounce back and we're going to hit all-time highs again, but it depends. It depends on what we find out over the next few weeks. Again, it's not an event where Trump says something, it's a monetary policy, you can right away, the bean counters can right away figure out the impact on the economy. It's not like that. This is a moving target. We've never had anything like this happen. And I'm not trying to panic you. I'm just being realistic. You know, what if tomorrow we come out and we find out that there's a cure, for example, a vaccine, and then we find out it only works on partially or it has side effects. You see where I'm going with this? Testing. When are we going to find out the full impact of everyone in the U.S. that's infected? Have we begun testing them correctly? Are these tests valid? Are more schools going to close? So the washout from all of this is just now occurring in the USA. And the question is, how is the market going to react and how much of it? The big question of it is, this is really the million or the $1 trillion question. How much of the downside has the market assimilated in its price? It's down about 20%. Has the economy been impacted by 20%? Probably. More so? I don't think so. I really don't think so. But the next few weeks we will know. Meanwhile, back at the lab, look, no matter how you play this, you want to be in the strongest stocks. REGN, very strong stock. Guild, very strong stock. I'm showing you the strongest stocks right now in the strongest sector, the NASDAQ 100. Take a look at these. REGN, GILD, TTWO, JD, INCY. Notice medical stock, right? Something to be said. Also, Costco. Costco's like sold out. So again, T-Mobile, Costco, eBay, INCY, JD, TTWO, Guild, Regeneron. These are the stocks that are going to rise the fastest when the market really begins pulling up because they have better relative strength. They barely sold off when the market went down 20%. Look at this. REGN over the last month, it's up 13%. Guild is only down 0.42. TTWO is only down 3.73. When the market rallies, not only did their resilience prevent them from going down, it'll help the market rally. So again, watch for the consumer sentiment report. It's happening exactly an hour from now. Try to minimize your exposure and be hedged. It's very important that you guys are hedged. I'm looking at the market right now. It's going to open up about 1,000 point. Now, one last thing before I let you go. If you've been watching my videos, then you know I've been expecting this correction and volatility for a very, very long time now. And after what just happened, I think you guys understand why, right? I mean, geez. Now that's why I recommend you watch the training that I had live last night. It was amazing questions. We got some amazing feedback. It was a very educational class. I've been told it was one of the best classes we've had. You're going to find out exactly what I'm thinking, how to protect yourself, how to trade in this crazy market, and how to turn flash crash to fast cash. Very important. You're going to get my game plan. You're going to learn how to protect your assets. Follow the link below. Now, as a bonus for anybody that watches, all right, I'm going to give you my number one flash crash stock. My number one flash crash stock. It could potentially pay you up to $7,800 in 14 days. I'm not kidding. Again, I talked about risk. I talked about diversification. I talked about clusters. I talked about various hedges. Folks, I answered all the questions about how to protecting yourself, how to minimize volatility in the current market cycle. All of it is in this video. Watch the replay now. Don't procrastinate. Don't delay. Do it now. You will thank me for it. I'm not kidding. You will thank me for it. It was so popular that I had to do a replay again, a second encore, live at 8 o'clock last night. People were just giving me the most amazing feedback. How to manage volatility, how to gain an unfair advantage in the current market cycle, how to protect yourself from all of this thing that's happening with coronavirus. Folks, and learn the number one stock that could potentially turn this flash crash into fast cash and give you $7,800 in 14 days, and that's only 10 trading sessions. Folks, follow the link below. Don't miss it. Click the link below. Watch it now. You'll be happy you did. Have a great weekend, everyone, and I think things are going to get a little better next week. I think the worst may potentially be behind us. Bye, guys.